one thing I want to tell customers is that you should have a car account. You should have an account, not necessarily where you bank at right now is. I'm for the credit unions because credit unions are for the people, by the people. Let me just
Right.
repeat that again. Credit unions are for the people, by the people.
Right.
Banks are shareholders, corporate. They're that. Now, do I belong to a big bank? Yes, I do. But I belong to a credit union. So if I need some money, I can go and I can get money from my credit. If I need a $5,000 loan, $10,000 loan, they're going to look at my money right there and say, oh, yeah, Regina has really paid her credit card bills on time, or she actually did this. So I'm going to be able to do that. So in other words, I'm going back to get an account at a different credit union or different bank, right? Where you have a car account where your money, because if you're not used to paying that car payment, then why not have your money coming out your check going to a different bank where that's your car payment account or that's your maintenance account, So that's how I know that was able to help me get through where my mind was like, okay, Regina, you want this, but how are you going to be able to pay for what you want?
Right.
And having that money going over here in another account, I've been doing it for years. That just has worked wonders for me.
So how can people leverage what type of relationship do they need to build with the credit unions in order to truly leverage that account? Because I hear you mentioned credit unions a couple of times. That seems like, man, this seems like a little cheat sheet right here. So, but how do they leverage that? Because a lot of people gonna have the big banks, right? They're gonna be the big box banks. But now, what is that process of? Okay, we open up an account at a local credit union. What kind of relationship do we need to build with that credit union, though, as far as maybe funds or maybe the type of activity that needs to be going on in order to get to a point to where we can leverage that relationship?
Okay, so you taking me all into my course right now, so I got to give this. You can go to course.reginacourse.com/presale.
Okay.
And you can go there where you can sign up for what? Waiting list, right? November, right after Thanksgiving, I will be dropping 1 or 2 modules. And you want to go because why you want to go there is because you want to get ready. You're going to pay 2/3 less the price. It's $97. You go there and you get ready because I'm going to open up a community page where I'm going to come on at least 2 or 3 times a week and we're going to engage and we're going to talk. But let me get into answering your question. So, a lot of individuals say, Regina, I got bad credit. I can't get a credit card. I got bruised credit. I can't get a credit card. They turned me down. What do I need to do? Well, one thing that you want to do is when you ease yourself on over to your local credit union or a credit union, you want to talk to them about getting a secure card if you can't get that credit card. If you just open up that car loan and your interest rates, the double digits, and you need to go establish a relationship at the bank. The credit union, which to me is the bank, but the credit union. And you can either walk in or you can call and make an appointment. Of course, now, I think some local credit unions, you're able to just walk in, but if you have to call, just say you want to, make an appointment to talk to someone about opening up an account where you want your direct deposit in there, but you also want to talk to them about getting a credit card, and you may say, well, you already been turned down with a credit card. Yes, but they're going to let you apply for a credit card first, and if they turn you down, then that's when they're going to offer you a secure card. And a secure card is where you take your monies and you put it down as a deposit and you borrow against your own money. You pay your light bill, your gas bill, just your essentials, right? And you pay it, and the credit union report to your credit bureau, and then some cases, 6 months to a year, depends on the credit union, they will return your funds back to you and they'll open up you a credit card. So, that's easy. And, I run into customers all the time and they say, you know what, I don't want a credit card. I can't control a credit card or I charge it off, but you pay gas, you eat, you do all those essentials. So why not use your money to do that? You got to remember, it always takes me back when I was 11, 12, 13 years old, when my dad used to say, you need to learn how to direct your money where you direct your money where you need to go. Don't let the money direct you. So it's just like when you pay your car payment, and you want to pay your car off earlier, right? You want to pay your car off. You in a 5-year loan or 6-year loan, and you want to pay it off early. Now, if you make your regular car payment and then you just send a little extra and you put it there, they're going to take that off your regular payment. They're not going to, you got to direct them where you want the monies to go.
Right.
You have to say, you know what, I need to pay a little extra. I want to pay a little extra on the principal balance of my loan. And then you tell them. So I always give you a long story, but going back to the credit union, just
no, the stories are good.
Sit down and talk to someone and establish that relationship. So they'll know who you are. Now, that means you already got direct deposit going to another bank. Okay, well, you can have direct deposit going to as many banks as you want. So if you just have a conversation, secure card, tell them you just got a particular car, my interest rate's in the double digits. I want to be able to refinance. What do I need to do? Now, I don't know if you're going to be underwater in your car. You're going to owe more on your car than what it's worth. I don't know how you travel, how many miles on your car. So this doesn't work for everybody, but in some cases it does. I run into customers that came to me and they're paying 22, 23. And when I try to tell them what to do, they were like, oh, I got my car. I'm good. And then they come back 4 years later. Oh, I paid my car off. And I said, oh, you paid off the same interest rate? Well, yeah. I said, did you look at how much you paid? Could you pay for your car? So if you can't refinance that particular vehicle, then what you want to do is you want to see if you can trade it in maybe 2 years, 3 years. The one thing that sets me off different than anybody else is, I'm going to be honest with you, because 70-80% of my customers have bruised credit. They had a situation. I mean, you could be making $20,000 a year, $100,000 a year, $500,000 a year. You could be a doctor, attorney. I've got all kind of customers across the median with their age and with the money that they make, right?
Right.
So if you, in 2 years after you have your car maybe you need to trade it in, but the thing is, when you trade your car in, knowing that you're going to owe more on your car than what it's worth, because maybe you paid, maybe you owe, let's just say $15,000 on your car, and maybe your car is only worth $10,000, right? That being, you have $5,000 in negative equity. Now, you look to get into a new car. You don't go into the bank. You don't go into the dealership and you say, I want to trade my car in, but I want to get that used truck over there. No. You try to get into a new vehicle, right? Because bro, $5,000 on to from used, you're buying used, you're gonna use the used, and you're gonna borrow $5,000. Unless you're gonna write a $5,000 check or a $3,000 check. You know what I mean? Help bury some of that negative, So everything has to make sense. It has to make sense for the bank.
Right.
And it all has to make sense for the bank. The bank could really honestly care less on what you think makes sense, because they're giving you the money.
Right. But I like how that you are breaking these things down. And, it goes back to what you said earlier when you say, we need to date our cars and not marry them. Right.
Yes.
And at the end of the day, we may have this goal for this Range Rover or, BMW, whatever that specific car is that you love. There's nothing wrong with you having a desire for that car. But the process of you getting to that particular car that you want may take time. And what you also have to remember, and what I hear you saying is, there's going to come a time where that new car smell or that Range Rover or that BMW is also going to be an old car smell too, right? And that you may eventually either want another car, or you may eventually need another car because it's a machine. It needs maintenance. It has wear and tear, just like any other thing. And the same thing with houses, right? I talk to people every time and tell them, when you're getting into a house, especially as a first-time home buyer, you need to be thinking about it as an investment, because at the end of the day, your first house is most likely not going to be your last house, right? That's not normally how the process works, because as you grow and your family grows, you need a house that has particular things. And the same thing with a car, right? You need a car with that gives you specific things, right? That benefits you and your lifestyle at that time and your needs at that time, right? Like you say, minivan versus truck versus 2-seater or 4-seater, right?